As U.S. regulators clamp down on crypto, industry advocates warn the country risks sending the future of finance abroad, and several competing jurisdictions hope to position themselves as crypto hubs. It may surprise you, but the United States' stiffest competition could come from the European Union. It might be counterintuitive. After all, Europe isn't known to have a light touch when it comes to regulating business. But with a population larger than that of the United States, an economy that isn't far behind, and a rulemaking process that's on track to give crypto the regulatory guidance it so desperately seeks, a consensus has emerged. The world's third largest economy might not be such a bad place to start your crypto business. In today's episode, we'll take a look at what the bureaucrats in Brussels are up to. Thanks to BitRefill for sponsoring this video. Keep watching to learn how you can shop online and physically without banks. Earlier this week, we discussed the US regulatory crackdown. There's been a flurry of enforcement actions from the top financial watchdog, the Securities and Exchange Commission. Separately, the Federal Reserve and other government agencies have made clear they consider crypto a risky asset that banks touch at their own peril. And one bank servicing crypto companies has had its application for membership in the Federal Reserve System denied due to its proposal to engage in, quote, activities that are highly likely to be inconsistent with safe and sound banking practices. Crypto advocates have called the approach regulation through enforcement. Without clear rules about what is and is not allowed, investors might think twice before they invest, builders might think twice before they build, and what could have been a thriving industry dies in its crib. Cody Carbone, Vice President of Policy at the Chamber of Digital Commerce, tells me it's an indictment of the American system of government. Congress is gridlocked. Proposed laws are, at best, difficult to pass. More often, they're dead on arrival. It's a bit different in the European Union. They're actually putting out proposals, Carbone said. The UK and the EU are actually putting out proposals that people can comment on, people can opine on, and it gives people a better sense and comfort of what the rules are, so they feel that they can comply. Now the big one is MiCA, or Markets in Crypto Assets. Although there's a final vote in April, it's basically a done deal. And it's not aimed at any particular part of the crypto economy, like stablecoins. It's comprehensive. It covers just about every aspect of centralized finance. According to reporting from CoinDesk, MiCA will force crypto exchanges to keep the public informed about their pricing process and trading volumes in real time, and settle all trades the same day that those trades happen. They'll have to separate their own money and customer money. Insider trading is banned. Companies that hold crypto on users' behalf will have to register. As such, interest in Europe is growing among crypto natives. This week, crypto podcast Bankless organized a forum on MiCA featuring a trio of policy experts, each of whom said the legislation would be a net benefit to the industry despite its many flaws. We'll get to what they had to say in a moment, but first, a word from our sponsor. BitRefill allows you to shop online and physically without banks, converting your crypto into merchant balance directly without any sign-up. It offers more than 10,000 gift card options in 180 countries, and in the USA, you can now pay bills like your mortgage or credit card. Creating a BitRefill account is not required, but it only takes 1 minute, and you can get 1% back in rewards. Back to our story. Patrick Hansen, Director of EU Policy at Circle, the company behind the USDC stablecoin, called MiCA the one regulation to rule them all, the first comprehensive regulatory framework for crypto assets in the world published by a major global jurisdiction. That's because it covers token issuance, stablecoin reserve requirements, custody of user assets, AML, notice and disclosure, and more. And its rules will be the standard across the EU's 27 member countries and 450 million citizens. It's not perfect, though. Those stablecoin reserve requirements will be onerous, Hansen said. Rules about when to KYC when transacting with self-custody wallets are kind of incoherent, according to Seth Hertlein, the head of policy at Ledger. An electric coin company, the organization behind privacy token Zcash, believes language in MiCA, quote, poses a threat to the privacy and security of individuals, businesses, communities, and nations by banning the trading of crypto assets that feature built-in anonymization, quote, unless the holders of the assets and their transaction history can be identified by authorized crypto asset service providers. Notably, though, MiCA doesn't cover NFTs and it doesn't cover DeFi. The EU is still studying DeFi, according to Rebecca Reddig, head of policy at Polygon. What comes of that is anyone's guess. But, as we've covered at the Defiant, there's been at least one positive sign on that front as well. A report prepared for the executive branch of the European Union last year recommended a suite of light-touch regulations for decentralized finance, and it's expected to inform the EU's debate on the subject. The report made 4 policy recommendations. First, regulating traditional finance entities that jump into DeFi. Second, incentivizing voluntary regulatory compliance among DeFi protocols. Third, creating a public observatory that analyzes on-chain data and issues warnings or recommendations based on that data. And fourth, regulating oracles, the technology that brings real-world data onto the blockchain. Most notable, however, was the general tone of the report. It asserted that DeFi and traditional finance are fundamentally different, and that the regulations that govern them should be different as well. It also cited the anonymity provided by blockchain technology as a feature and not a bug. US-based crypto lawyers were impressed. One thing is clear, the EU is light years ahead of the US on DeFi, Mark Goldich, general counsel at Proximity Labs, said. Gabe Shapiro, general counsel at Delphi Labs, agreed. At this rate, he said, Europe is going to eat the US's lunch when it comes to crypto, Web3, and DeFi. Taken together, it spells trouble for crypto in the US, Carbone told me. But, he said, we're getting to the point in the US where people are saying, hey, I'll take overly burdensome rules in the EU and find a way to comply. I'd rather that than just living in this no man's land where I don't know if I'm going to face an enforcement action. So, what do you think? Would you trade New York, San Francisco, or Boston for Lisbon, Paris, or Berlin? Let us know in the comments below, and as always, if you enjoyed this video, please hit the subscribe button.